Hi everyone, Donnie Schultz, Embrace Home Loans. Monday, April 11th. We're moving the weekly market update from Friday afternoons to Monday mornings just to get it in front of you at a better time. I think we definitely have some valuable information here that'll get you set for the week with your clients, especially in this type of market. So the last update that went out was 2 Thursdays ago. We had discussed how we had locked in a number of our clients at that point. We've seen rates going up steadily since mid-December. That rate movement has had the same characteristics. It's big spikes up and then small pullbacks, big spikes up, small pullbacks. And Thursday we were really coming to the tail end of one of those pullbacks. We were worried about volatility picking back up and that upward pressure continuing on interest rates going into the jobs report 2 Fridays ago. It's exactly what we saw. Jobs came out, rates started moving higher. Last week, a lot of upward pressure on interest rates again. Fed Governor Maynard came out the day before the minutes release from the last Federal Reserve meeting and really set markets or prepared markets for a hawkish minutes release, and that's exactly what we saw. The Federal Reserve outline their plan to reduce their balance sheet. So not only are they going to be increasing rates, but they're also going to stop their Treasury and mortgage-backed security reinvestments, and they're going to do so very aggressively over the next 3 months. So markets prepared for it. Rates moved higher. 10-year Treasury moved higher. We've seen that pressure continue. It's continuing again today. Rates are higher today. Average 30-year fixed rate is going to have a 5% in front of it right now. So you're going to see these rates in the low to mid fives depending on the credit scenarios, property types, usage. Question is always going to be, where is the top? At this point, we would expect another one of those small pullbacks. The 10-year Treasury right now is in a battleground, 2.75, 2.76. Over the last couple of minutes, it's actually gone above the 2.76, which is not a great sign. We really want it to hold below that level, and then we would expect some relief here, small pullback, another opportunity for buyers who are going into contract to lock in at perhaps an eighth or a 0.25% lower from where we are this morning. If the 10-year cannot hold below this 2.76 level, we want to be locking in because we definitely have the potential to continue moving higher here, especially with inflation data coming out tomorrow. It's a holiday shortened week in markets. Bond markets are going to close 2 p.m. on Thursday because of Easter. So there is some concern here for buyers, and when the ideal time is to lock. We want to be very, very defensive here. You want to be working with a lender that has a float down policy. Bigger picture, we are coming close to a top at some point. It's just, where is it? Is it when rates hit 5.5? Is it when rates hit 6%? We've been talking about that range for a little while now. We're probably about a half a percent off right now from saying, hey, we would expect this to be a reversal point where now rates start moving lower. When we do hit that point, how long does it take for rates to move back lower? So there's a lot of variables right now. We're keeping a very close eye on economic reports as they come out. We're going to keep you updated. Buyers are starting to feel the pain on this. So thoughts as far as markets go, we're seeing buyers who are a lot less ready to be aggressive on offers. If they're looking at a house at $600,000, 3-4 months ago when rates were in the low threes, they were much more likely to be aggressive with those offers, go a decent amount over the asking price to get an offer accepted. We're starting to see the hesitancy there with our buyers. They're seeing these payments go up, they're seeing these values go up, and the conversation is becoming a little bit more concerned about being as aggressive on the offers. So more important than ever to make sure that your buyers team stands out. You want to have your lender, you want to have your offer presented correctly, you want to have these buyers making sure that their financing plan is in place to put them in the best position possible without necessarily having to go significantly higher than the asking price. I think we're going to see these offers really compress here, and we're going to have we're still going to have the competition, we're still going to have the buyers. Terms are going to be key over the next couple of months as these rates stay at these elevated levels. Any questions, you can reach out to me and my team anytime. I hope everybody has a great day, great start to the week. Talk to you guys soon.